Now here we see how fortunes recovered dramatically and, I would argue, unexpectedly in 2009. This chart shows the Guy Carpenter Bermuda Composite, and we have just taken the sources of earnings for that cohort of companies as reported for 2008 and 2009. And here they're reporting aggregate net income of $9.5 billion compared with a loss of $1.9 billion in 2008. And what were the principal drivers of that recovery? 71% increase in underwriting earnings, a 72% decrease in realized investment losses, a reversal of unrealized losses, and a reversal of what we show here as the other category, which was heavily affected by losses realized on XL Capital's sale of its SCA interests in 2008. You can see the evolution of capital for this Bermuda Composite between December 2007 and December 2009. Aggregate capital for this group decreased by 15% in 2008. And you can see the primary drivers there. In the first half of the year, we had the outflow of dividends and share buybacks. And then later in the year, we saw unrealized investment losses coming through on the balance sheet. Those were the primary drivers for that particular year. And the market reversed this sharply in 2009. You can see substantial net income, and that really is arising from very moderate levels of underwriting losses, in particular catastrophe activity, and we'll come on to that in just a moment. The other issue there was the substantial recovery in asset values. You can see it's the second tallest blue bar or turquoise bar in 2009. At the end of 2009, shareholders' funds were 15% higher than when the industry entered 2008. And the industry was largely considered to be overcapitalized at the beginning of 2008, hence the large amount of dividend and share buyback outflow that you see in 2008. Now, these swollen balance sheets are actually very important to understand because they have an important effect on demand as insurers have a greater capacity and appetite to retain risk, particularly if they consider the price of reinsurance to be excessively high. They have that additional flexibility as a demand function.